is crypto beta, this is crypto beta. Crypto beta for you, this is crypto beta, this is crypto beta, this is crypto beta. Crypto beta for you, smash those likes. Smash those likes. Crypto beta for you, smash those likes. Smash those likes. Crypto beta for you, smash those likes. Smash those likes. Crypto beta for you, for you, for you.
Hey babe.
Yeah.
What's crypto?
It's digital currency. What's the next one?
Hey babe.
Yeah.
What's blockchain?
It's like what information's stored on. So like, it's, you know, what information is stored on.
Hey babe.
Yeah.
What's decentralization?
Oh, there's not one person in charge of anything. So it's everybody keeps everybody else in check. So there's not one big like unit or entity to uphold everybody to the same code. It's the people holding each other responsible.
Hey babe.
Yeah.
What's Ethereum?
So Ethereum is a general purpose blockchain. So unlike other blockchains like Bitcoin, for example, that are just designed around one application, so the way that Bitcoin is designed around digital money, Ethereum is an open platform that allows people to build their own applications on top. And anything built on top of Ethereum, it's protected, secured, everything is checked by this entire network of thousands of computers around the world that are protecting and checking every transaction on the blockchain. But because it supports a programming language, developers have this unlimited creativity in what kinds of things that they actually create on Ethereum. So you can use Ethereum to make cryptocurrencies or NFTs or many other kinds of things.
Mm-hmm. Mm-hmm.
Yeah, that makes sense.
Okay, I have two questions. First question is the obvious question. Why is Vitalik in Ashton Kutcher's house? And the second question is, Mila, will you marry me? Welcome back, guys. Welcome back, welcome back. We had a great event last night, right? I mean, great event last night. We had, I don't think it could have gone much better than it went last night. And we still got this relief rally, this pump, which is actually holding. It's holding at 32,000 or above 32,000. I guess the big question now is, do we have enough momentum to ride this up properly? In other words, is this not just a quick relief rally before another leg down? Is there enough momentum? Is there enough volume to drive the crypto markets up again and to drive them up again convincingly? And if that is the case, this Tether FUD that is going around, is it real? And can Tether actually crash the markets? I want to put this Tether FUD to rest once and for all, because I've been in the crypto markets, and since 2017, I guess, there's always been Tether FUD. Always been Tether FUD. And Tether's like this cat with 9 lives, because it just keeps surviving and keeps surviving and keeps surviving. So today, what I want to look at is whether this Tether FUD is actually real. What is this Tether FUD all about? Is it real? Should we be worried? Then what we'll do is we'll look at yesterday's event, and we'll look and see whether the event could have gone better than it actually went. I think the event was superb. But we'll look at some parts of the event. If you missed the event, well, guys, we did a whole stream yesterday. We had a viewing party. For those of you who missed it, straight after the event, we then had a little review of what actually happened. So that's what we're going to be talking about today. Then we're going to speak to a very special guest. I know you guys love Crypto Birb. The guy is, I think he's top 3 chartists in the world. And we're going to talk to Birb today about what the charts are saying about this relief rally. Then we have a big segment for you guys. Trading is all about mindset. And today, later on in the show, we have Wendy Rhoades from Billions. So the original Wendy Rhoades from Billions. Not the actress, because I don't think the actress can get our mindset right. But I'm looking for Wendy Rhoades, the original Wendy Rhoades. Like, so, Billions was based on the story of Steve Cohen. Steve Cohen was a big hedge fund manager. And he did have this Wendy Rhoades in his office. And today we're going to speak to Denise Shull, and she is the original Wendy Rhoades. Massive show today. And then tomorrow, let me tell you what's going on tomorrow. We have a banter, but not just any banter. Okay, look at these guests. Sam Bankman-Fried tomorrow. Mike Arrington tomorrow. Vinnie Lingham tomorrow. Alex Mashinsky tomorrow. Basically, tomorrow is a huge banter. So, guys, welcome to our channel. If you're new here, you've just realized that there is no other channel in the world that brings you this kind of programming. No one in the world is going to bring you guests like this every single day. Crypto Birb, Wendy Rhoades, tomorrow, Sam Bankman-Fried, Mike Arrington, big shows. Smash the like button, smash the subscribe button, join our community. This is the most loyal community in the entire world. YouTube told us, Twitter told us, everyone's telling us that our community is the most loyal community in the world. We are like a family here. We're like a family here. We're here in the good times, we're here in the bad times. We help each other through COVID. We helped Freddie when Freddie lost his dad. I don't know what Freddie would have done without the support of the community. So yes, we're a family here. So if you're new to this channel, welcome. Join us, subscribe, hit the bell notification button, and let's get on with the show, because today we've got like a long, very important show. Freddie's doing like this. He's like, listen, get on with the show. All right, let's talk about stablecoins and why stablecoins are so important. No doubt you have noticed that there has been a lot of a big spotlight on stablecoins. The spotlight probably started a long time ago and started when Tether, USDT, the biggest stablecoin in the market, who then had a market cap of about $2 or $3 billion, was taken on by the New York Attorney General. And they were taken on because their reserves were not 100% backed by US dollars. At the time, there was about $600 or $700 million that were missing. In the settlement with the New York Attorney General, without admitting liability, so this is one of those settlements that happened without admitting liability, they settled. And in the settlement, part of the settlement was that they had to pay, I think they paid, Tether will admit no wrongdoing, but will pay $18.5 million. And the next part of the settlement is that Tether would provide quarterly reports to the New York Attorney General, which show the composition of the Tether reserves for the next 2 years. At the same time, Tether is not allowed to operate in New York. So very weird settlement, because you're settling with the New York Attorney General and you're saying, look, you're not allowed to operate in New York, but every month you've got to submit reports to the New York Attorney General. Like, what's going on? And I see in the comments, it's true. Since I've been around, there's always been Tether FUD. We have to debunk this Tether FUD once and for all and decide whether this Tether FUD is bad for the market. Why is everybody so worried about Tether? Well, the answer is very simple. Tether is today the most used stablecoin. When people want to come in and out of crypto and in and out of the blockchain, in and out of the ecosystem, the rails between US dollar and blockchain is you deposit US dollar, you give it to Tether, or you give it to an exchange, the exchange takes your US dollars, gives it to Tether, and you in return get these Tethers. That's what the use of Tether is. And when you're trading on an exchange, because an exchange can't talk to a US dollar, it has to talk to a digital dollar. And in this case, they use Tether. So Tether is super important in the ecosystem. And of late, the regulators have been looking at Tether. It started off in the beginning of July, I think it was, when the Federal Reserve chairman in Boston turned around and he said, while the crypto market is fluctuating, stablecoins are steadily getting bigger. Many economists, including Eric Rosengren, president of the Boston Federal Reserve, claims it's concerning. And it was the first time that one of these people from the Federal Reserve actually pointed out the word Tether by name. And that started a whole host of questions again about stablecoins and whether stablecoins can actually collapse the economy. Because if you think about a $63 billion asset, if Tether goes down, the whole crypto market will collapse with it. If all of a sudden people can't redeem their tethers, or tethers are not backed by US dollars or enough US dollars, and there is a run on Tether, in other words, people go and try and get their Tether, and Tether can't pay them back, that could collapse the whole crypto market. That could mean that there's $60 billion that is in the crypto market that may not be backed by US dollars, and people won't be able to redeem it. What he also went on to say, he said, in a presentation titled Financial Stability, Rosengren identified Tether stablecoin as a new disruptor for short-term credit markets and listed it amongst 3 financial stability challenges. Now, he's not talking about financial stability for crypto. He's talking about financial stability for the United States. What he's saying is that Tether is now so big that if Tether collapses, crypto can collapse. And if crypto can collapse, or if Tether collapses, it poses a risk to the entire United States credit market. And so he's admitting how big the Tether community is, or the crypto community is, and the fact that it can now and probably will, if it does collapse, take down the credit market, because Tether owns a whole lot of credit, a whole lot of credit notes. So that happened, and then Fitch, which is the rating agency. I know you guys all know Fitch. We've spoken about Fitch many times on the show. But Fitch then followed up with an article and said, stablecoins could pose new short-term credit market risks. And this came off the audit that Tether sent on the 31st of March to the New York Attorney General. And in this audit, Tether showed the composition of the Tether reserves. And in the composition of the Tether reserves, you can see that Tether owned 50% commercial paper, whatever commercial paper means, 2% other investments, 2% treasury bills, 2% reverse repo notes, 3% US dollars, 13% secured loans, and 18% fiduciary deposits. The question is whether all this means that Tether is actually backed one-to-one. Because if it's not backed one-to-one, then we have a problem. Let's quickly understand how Tether works. I said it to you guys before. You put money into an exchange. The exchange gives you US dollar Tether in return. Tether then takes your money and invests your money in stocks, in cash, in Bitcoin, in other investments. And it's supposed to be a relatively risk-free portfolio, or a very risk-averse portfolio, so that if the markets go down, the value of the Tether is still strong enough. That is how Tether makes its money. Tether takes the money that you give it and it invests it in long-term, stable assets that perform at very low yields. They make a very small yield, but they make a small yield on a market cap of $60 billion, because that's how many Tether are in existence. Last night, CNBC had an interview with the founders of Tether, and I want to take you guys through the interview, and I want to take you guys through the answers, and then let's work out whether Tether is actually backed. And the first question that CNBC asked was, is Tether actually backed one-to-one? The funny thing here is that Paolo Arduino, who's the CTO of Bitfinex and Tether, brought his general counsel, his attorney on the line. Every time they have an interview, they bring their attorney on the line. Let's see how he answered the question.
Well, it is the case, Deirdre. We are backed one-to-one to our reserves. And
your reserves are not the US dollar, though.
No, they're not completely US dollars, but they are fully reserved and backed. And we provide quarterly assurance attestations from independent accountants proving that all tethers issued are fully reserved and backed. We've produced 2 of those so far this year, with the 3rd on the way. We hold a strong, conservative, and liquid portfolio, to your point, Deirdre, about the composition of our reserves, with an emphasis on safeguarding them. Most importantly, we have never refused a redemption to a customer, not one time. That's very important for the public to understand, I think.
All right, so he admits that they're not backed in cash. We know that the reserves are not backed in cash. They said that to the New York Attorney General. They said, this is the backing of the US dollar Tether. He also said that they've produced 2 independent auditor attestations. It did not say independent auditor audits. He said attestations. And attestations is a process in which auditors don't actually fully audit something, but they do give you a letter to claim something. When he was then asked another question. Listen to this. Listen to what he says.
We believe that the community has already vested its trust and confidence in Tether. Since February of 2019, we've grown from just over $2 billion worth of issued tethers to our current market cap of in excess of $62 billion in issued tethers, a growth rate of more than 3,000%. And more importantly, our 24-hour volume across exchanges lately is $45 to $50 billion, which dwarfs the competition. So we think the market has spoken. We believe the market has voted with its feet. The market has shown its trust and confidence in Tether and its products.
But Paulo, volume, popularity does not necessarily equal trust. Yes, you guys have grown immensely. You're now the third most popular cryptocurrency in terms of market cap. So let's get into some of the details. Stuart just said that you guys are backed by reserves. You guys published a pie chart that showed less than 3% of that actually was US dollars. More than 50% of that is commercial paper. I know you guys have said that it's rated A2 or above. Can you give us any more details about what exactly that commercial paper is?
So we don't disclose our commercial partners, so that is quite important. We want to, given our portfolio composition in commercial papers, we believe that is quite important to respect the privacy of the banking partners that we work with.
Okay, so we know that that there's commercial paper, but they won't disclose what commercial paper is in their portfolio. And it is quite worrying, because what if this is high risk Chinese commercial paper? What if it's, emerging market commercial paper? They are falling back on the fact that Tether is popular. And they're saying that because Tether is so popular, that the market trusts Tether, and that the market has already voted by selecting Tether and making Tether the biggest in the US. They're saying that the market has already voted. The market actually does trust them. The host at CNBC then kept asking the same question. What is in the portfolio? Tell us about the paper that is in the portfolio. And at this point, the general counsel stepped in again.
Yeah, absolutely. Deirdre, our portfolio contains international commercial paper. As you noted from our public disclosures, it is overwhelmingly rated A2 or better. And we think that's the key thing here. And we think that transparency with the market and how the market has spoken and decided here is what's really important, and what's important for your viewers to understand. With respect to Secretary Yellen and regulation, we believe we are pioneers in this industry, which is all very new. Regulations, rules, laws are being made by the day. We are leaders in transparency and in getting information to the community and to our stakeholders, demonstrating that our issued tokens are fully backed and reserved, and we want to preserve that position. We are not just keeping up with rules, but we are helping to shape them, and we're helping law enforcement and regulators globally. We're committed to being a positive force in this ecosystem. Okay, so they are committed. They're saying that it is backed by commercial paper. They're not going to tell us what's in the commercial paper. The Deirdre Bosa, who's the host at CNBC, she then asked him, why is it that when the market is going down, all of a sudden there is no issue of new tethers? In other words, there's always been such aggressive growth of new tethers, and you're saying that the market really trusts you and that you are the most used stablecoin. Why is it that Tether's not growing anymore? Why is it that in the last 2 months there's no new issues of new tethers? And watch how irritated she gets with Paulo Arduino, who's the CTO of Bitfinex and Tether. Watch her face, watch her movements.
So actually, if you look at the charts, it's not just Tether that stopped growing as it was growing before. So sure, the second and third stablecoin by market cap grew just a little bit in the last month, but really nothing compared to the previous months. So that is just due to the changed market conditions and changed demand and offer. So you can see the crypto markets went down significantly from the top 65K for Bitcoin, for example. So it's clear that investors are waiting on the sidelines, and that reflects also on the issuances of stablecoins. So it's a broader, is something that we have all in common.
Paolo, I am looking at the charts and I'm not seeing what you're seeing. Let's take USD coin, for example. It has actually risen steadily in that time frame from about $23 billion to $27 billion. So I have a hard time understanding that argument.
Well, you should compare it with how it grew in the past 3 months, right? You can see that the growth from 23 to 26.5 is nothing compared to the growth from 3 to 2023 in just a few months. So it's of course Tether. There are many more Tethers in circulation, so there is less need of new Tethers. But if you are smaller, it's easier to grow faster. I believe that is, we are seeing.
Well, that's a different answer than what you just said. You said that demand has actually led to less issuance, but now you're saying that if you're smaller, you can issue more. It's easier. So I'm hearing two different things there.
I don't think is correct. So if you have, let's say you have $10 of a stable coin, arriving to $20 is easier than going from 63 to 70, right? So I think that what I'm basically saying is that the growth of the general growth of among all the major stable coins has shrinked. So Tether definitely is flatlining, but the others are shrinking and slowing down as well. That is due to a different market demand that we are seeing in this moment.
I don't think she believed his answer, and I think she looked at him and she was quite adamant that other stable coins are growing. I know you say stable coins aren't growing, but USDC is growing and all the other ones are growing. It's just Tether that's not growing. Bottom line is, guys, why can't they just produce an audit? There are a certain number of Tether in circulation. There should be $63 billion, and it should be quite easy to audit. I mean, where is the $63 billion? Show us where it is, bring us certificates of deposit from the bank. It's not the toughest thing to audit. Why can they not just produce an audit? Listen to what he said.
We are working towards getting financial audits, which, by the way, no one else in the stablecoin sector has done yet. We are seeing who will get there first, but we are in process. We are getting that done. Audit services have not been widely available inside the crypto economy as a whole. Everyone is still learning about this, but we are working towards getting those audits now. And in the meantime, we are providing the assurance attestations.
They're providing assurance attestations. They're saying that you can't provide audits in the crypto ecosystem. I think that's absolute garbage. We don't need to audit the crypto ecosystem. We need to audit your deposits. We know there are 63 billion Tether in circulation. You've said it. It's on the blockchain. We can track every single one of them on the blockchain. But what about your assets? Can you not give us a printout, an audit report of where there are $63 billion worth of assets? Surely, if you can produce this chart, then you can audit what's behind each one of these things. You talk about commercial paper. You can audit that there's 50% commercial paper. Show us that there's $32 billion worth of commercial paper. If not, you don't need a crypto auditor to do this. Another thing which is very fishy, and Jim Cramer actually mentioned this, but if they are such big buyers of commercial paper, $32 billion of commercial paper, according to that pie chart, how come no one in the commercial paper game knows who they are? Listen to this.
So we do talk to lots of people. One of my colleagues, Jim Cramer, he knows lots of major players in the commercial paper industry. Lots of other folks say that they ask whether they're doing business with you guys, especially because you're one of the top 10 commercial paper holders in the world. How is it, though, that none of the people we talk to as CNBC have heard of you guys?
Well, Deirdre, I can't speak to what someone else knows or doesn't know or sees or isn't seeing.
Help us understand then. Are you guys buying through an intermediary?
Right. We maintain, that's exactly right. We maintain accounts at a number of banks, financial institutions. They request quotes for commercial paper offerings from their banks, who in turn request those from brokers and other counterparties, both direct from issuers and on secondary markets. So I can't speak to, I'd be speculating if I talk about how people see that or aren't seeing that in the CP markets. But that is how we are operating. That's how we're buying our commercial paper, which again is rated overwhelmingly A2 or better.
Okay, this is where it gets really interesting. He was asked about his disclosure to the New York Attorney General, and this is how he responded.
New York AG's office made no negative findings whatsoever that tethers were not fully backed, nor were ever issued without backing for the purpose of manipulating crypto markets. That's not true, though. They specifically did find that tethers were not fully backed.
No, the New York Attorney General's office, Deirdre, found that we made mistakes in our disclosures about the one-to-one backing with dollars. Within slightly more than 3 months, those disclosures were amended.
They made mistakes in their disclosure to the New York Attorney General. Come on, you didn't make a mistake. So he was asked, okay, when are you going to produce an audit? When does the audit actually come? And this is what he had to say.
Question, just to follow up on the audit, to go back a tiny little bit. I know that you said you would be thrilled to be the first sort of crypto company and stablecoin to go through an audit. Do you have a date in mind?
We don't at this time, no. But we're reaching back a couple of years for the financial audit, and that is in process.
Okay, do you think that's years away, months away? Any
months,
clues?
not years.
Only months away.
Yes, we think so.
Okay, great. Well, I hope you'll bring it to us, and we'd love to see it.
All right, so that was the majority of the interview. So let's sum it all up. The question is Tether solvent, or is Tether one-to-one backed by US dollars? To be honest, I actually think that the answer is yes. And that's because I've known this company for a long time. I know what their business model is. And I don't think that the founders of this company would take a chance around a $64 billion market with the fraud. I do think they got themselves into a whole lot of holes early on. And I think they're patching this all up. But regardless, you do have many other options on the market. You've got USDC, you've got many of the other options. USDC, in my opinion, is a very clean company. They've done many audits. I know Jeremy Allaire, he's been on the show before. They've done audits before, and their audits are actually very, not audits, but they have disclosures. But they're very sound, and they've got a much higher cash balance on their balance sheet. They've got, I think, over 20% cash on their balance sheet. So to me, why would I take the risk of holding USDT when I can hold USDC? You've got choice. My option, or what I usually do, I usually go straight into USDC. And I avoid any controversy around Tether and any risk that's associated with Tether. That being said, though, if the Tether FUD does implode, regardless of what stablecoin you're holding, the crypto market is going down. Bitcoin will go down, Ethereum will go down, and the whole market will go down. So let's keep an eye on the story. Let me get Birb into the chat. Birb, what do you think? I mean, is Tether backed? Birb, we can't hear you. I think you muted yourself, but you look good.
Yeah, I appreciate it. Whether or not this is truly backed or not, I do believe that this is, to be honest, irrelevant, because it's not within our, sort of like things that we can manipulate or improve. We can just argue about it, right? So I believe it's not fully backed. There is a lot of shady processes going on in crypto. That's the reality for now.
Okay, but we can improve it. We can just trade into USDC instead of holding more USDT and printing more USDT. Let's go into USDC. It's so much easier. We can do it. We know Circle are going public through a SPAC. If you're going to go public in the United States, you're going to get audited and you're going to be held to the highest standards of the SEC and the highest standards of audit. Why take a chance on USDT when there is a little bit of smoke around them?
Yeah, to be honest, this is a project just like any other, right? This is just kind of like serving different function, different option than making money purely, rather preserving the capital. But when there is a lot of shadiness just behind a project, why would you go for that, right? When you have other clean options. So USDC by all means.
Amazing. Birb, This is the upside down Bart Simpson, right?
Yes and no.
Show me your charts and tell me whether you are convinced about this Bitcoin pump. We did go down. It felt like a mini capitulation of sorts. Show me the peanut. Show me the hope. Is there hope? Yesterday you tweeted that you deployed $300,000 into the crypto ecosystem, not because you think it's a bottom, but you think it's close enough, and timing it any further would actually be foolish.
That's very right. That's very right. And actually, I have prepared, 7 reasons for why I do believe everybody, should account Bitcoin as more bullish than bearish on the long term. And starting off, kind of like just want to let you know that we are still in the one and the same range that's been lasting for 65 days after a sharp decline, which was kind of like, just literally the result of another 3-month-long sideways, okay, with a lot of fake outs in here. And we were, I was there with you around on the shows, and I was telling how I disliked, the fake breakouts on top. So we ended up crashing, of course, for 55, 60% decline drawdown from the top to the bottom. And locally, there was a couple of indicators that played a crucial role. And you can tell there are 3 arrows, from the short and medium term and longer term perspective. And these arrows actually pinpoint some sort of like supply zone, supply layers, where you could expect intensified selling to occur. And this is mainly because we are here, this yellow tiny anchored mean in here. This is the volume weighted average price anchored at around this $35,000 highs, or $36,000 highs, if you will. It is right below the 50-day moving average. This is a daily chart. So this is the 50-day moving average. Okay, so 2 moving averages which are very close to one another. One is backed by volume, the other one is backed by the natural nature of statistics. And this naturally gives you the supply layer, the confluence, the two kind of like confluent resistance areas coming from the trend lines, okay, that the moving averages are. So firstly, only if we can break and manage to climb above this and close the week over the $36,000, mainly because of the supply layer. If we go up over that, close through, it is possible we actually climb, but the step up climb, just the stairway up, towards the Naver supply zone. The Naver supply zone comes from the volume weighted average price, which is anchored at the top, okay, and it actually just corresponds. This is the fair price. This blue curve is the fair price according to the volume. Okay, so anything below this fair price is supposed to be at least temporarily short-term undervalued, right? On top of that, you had 200-day moving average, 200-day mean, okay? So again, another confluent area of supply, right, between $42,000, $44,000. So if we manage to break and close the week or month over $36,000, 44 is the next step, which of course is confluent additionally with the range highs, okay, because that's the range highs of this entire 65, 66 days in the past. On top of that, you had the volume supply cluster coming from the sell-off, okay, from the all-time high towards a 30K drop. We had a 53, 58K supply, very thick break layer of resistances should be forming in there. So this is kind of like just jumping from a level to a level, right? And if we manage to successfully reclaim one level, we go to another one and so on. And I do believe that at one point, we are to retest anytime soon the 200-day moving average because of the mean reversion, the statistical nature of the time series that the price action is. And on top of that,
whoa, that is, if you're going to retest the 200-day moving average, that's 44,000, isn't it?
Exactly, it is. In my opinion, just a matter of time. And there are so many other, just reasons. But again, this is just a short-term overview. But if we go and look very briefly, at the long-term data, these are the bear markets. 2014 with Mt. Gox, 2017, of course, right? This does not look like a bear market at all. Many people call that bear markets last year or more for Bitcoin. They don't last 2 months or a month. On top of that, if you apply the Elliott waves measuring counts, you would have the idea that we initiated the bull market with the bottom of 2018, right? Initiating the wave number 1, the wave number 2 corrective with the downside deviation, downside overextension from the COVID. Wave number 3, which is usually the longest one. Right now, clearly we're in the wave number 4. There is no single doubt about it. And what comes after wave number 4 in the primary bull market is a wave number 5. So whatever happens in here, if we get $24,000, we're in the 4th wave out of the fifth 5-wave cycle, right? So this is just a kind of like a first reason why we should be bullish, because we are missing the final leg up. On top of that, NUPL, if you look at it, one of my favorite indicators, which tells you about how over leveraged the market is, tells you about the ratio between net unrealized profit, okay, versus the entire market cap. So tells you how much money is lying on the table for the whales to take it. Right now, the market has reset to the levels unseen ever since this period, which is pretty much like May 2020 or July or September 2020. So which is exactly where Bitcoin was trading below, well, not only below $10,000, but it was trading somewhere between $6,000 and $9,000, right? So we kind of like literally reverted back to where we were last year in May or September. So this is another bullish thing. The market is reset. The market is not leveraged anymore. The market is literally waiting for potential, room up.
The market can go down much further. If I look at this metric over here, look at January 19, where the market was down, where the ratio was down in the red. Look at March 2020, which is 19. Probably COVID. Jan 19. Look, it looks like we could go a long way down.
Provided that this is a bear market, right? But with this difference that Elliott waves kind of like excludes this option of the bear market. Of course, if the UFO landings or asteroid crashes into Earth and we all die, then there's not going to be bull market continuation. But assuming nothing like this happens, we are quite clear that with a lot of market literally reverted back to where we were before this entire 3rd wave happened. So we are again in the preparation of finishing the wave number 4 and proceeding to wave number 5, right? Wave number 5. On top of that, again, now you would have something that I call disbelief to zero because of that, because that perfect area in here and in here was perfectly what I call disbelief. And I threw out so many tweets about that the other day, that many people thought literally that, there was a massive breakout in here, right? And they people, there was on this breakout, like fear and greed index was like 20 or below 20. I remember that perfectly and clearly. So the perfect breakout in the upside direction of a multi-month downtrend, and people were extremely salty. So that can only be disbelief. And that is what I will call disbelief to zero right now. So the point number 5, right? Because there's been a couple of them already. Fear and greed index, we've been trending down. We've been trading after trending down, we've been in the sideways, steady, extreme salt, extreme fear on the market, extreme toxicity from the people. People are extremely salty because they either had lost their money or they are just simply not patient enough to survive in this market. So we are right now, after yesterday's climax of 30K breakdown, which trapped so many people again, one more time below 30K, we are, in my opinion, close to end. This part of sideways, it's coming to an end because of the volatility, then the statistical nature of it, and the saltiness of the people. And fear and greed index is extreme fear. Historically, extreme fear is always about good buying opportunity. We're ranging based on price. We are ranging after heavy decline with abnormal volatility. So this range after abnormal volatility is something more bullish.
We've developed a salty alert, and that's like to tell us when people are salty. I love it. The more salty people are, the lower we are at the bottom to the bottom, and the lower we are to the bottom, the higher, the bigger the chance that we're going to recover. Birb,
I love it.
You're actually charting human emotion here, right? I mean, this chart
that's
that you showed, the stochastic. You're going to show me the stochastic, right?
This is actually not stochastic per se. This is a Burbicator, which is free on TradingView for everybody. Okay, everybody can get it for free. This shows, and this is presented in the form of oscillator, but it represents the trend and the momentum. And right now, I kind of like had already mentioned that so many times, but step number 7, the point number 7, for I believe what makes Bitcoin so bullish right now. Paradoxically, as opposed to what many people would say, we are completely reset on trend and momentum based on on-chain, just like I said, based on the NUPL. So there are so many confluent indications that we are in the bottoming process. It doesn't get you the perfect bottom or top. And if FUD comes, if the Binance closes on the planet because I don't know, CZ goes to jail and everybody loses their money, or Fed announces that they're going to close down people in jail for trading crypto or something like that, of course Bitcoin would drop. But $23,000, $24,000, why this may happen, I would propose most to the people focus on the long-term perspective, and long-term perspective is perfectly reset at the levels actually unseen ever since September 2019 as well, right? So it's not only September 2020, but it's also September 2019 that the market is so oversold, the market is so salty, the market is so making so much upside potential space, and while missing, the fifth wave of Elliott and all the points that I mentioned, like an UPL reset, disbelief to zero for sentiment, extreme low fear and greed index that was never this low, even 2018 bear market. It's all crazy, in my opinion. It's all bullish.
Birb, as a trader, what do you do when you're in a bad mindset? What do you do if you've had multiple trades that go bad? What do you do very quickly?
Yeah, I'm a position trader, which is not a day trading. I'm a position trader, so I usually trade medium to long time from perspectives. That's the main focus. I don't display 15-minute charts usually, right? Because I know that the biggest scams happen exactly there.
When you have no bad trade, how do you get your head right?
I do the boxing. I do gym. I actually started dieting. It's my day number 9, I believe, or day number 8.
It looks like you've lost weight.
Maybe, hopefully. Hopefully. So I do the dieting. I started doing cycling. I have a beautiful life, all of that.
That post-marriage glow.
Hopefully. Glad you read it this way.
So, Birb, thank you very much, my friend. Thank you so much. Much love for you. We are running out of time because we do have a very good guest. You may want to watch this because where the big money goes when they're in a bad mindset and their mindset is not right. Where the big money, the Wall Street money go to? They go to Wendy from Billions. Remember Wendy from Billions?
There you go. I can.
So all the hedge fund managers actually go to Wendy from Billions, and we have got the original, not obviously the actress, because the actress can't help us, but we have the original Wendy Rhoades from Billions right here live on the show straight after you.
Wow, I'm staying here. You're not getting rid of me.
Amazing. Well, Denise, welcome to Crypto Banter.
Hey, hi. How are you all?
Good, Denise. Birb, I'm going to put you in the waiting room, but you are welcome to stay. Denise, it's such an honor to have you on Crypto Banter. We were all fully inspired by Wendy Rhoades and her role in Billions, and we managed to track down the original person that the character was inspired on to come and talk to us today. So it's a great honor to have you here on Crypto Banter. For people who don't know what you do at Rethink, maybe just give us a little bit of a background. Who are you? What do you do? And we'll take it from there.
Most of the time, I'm on the phone with someone who runs a hedge fund or runs a portfolio at a hedge fund. Some of them are household names. A lot of them aren't. Helping them talk through their feelings, their emotions about their positions. Helping them sort out their decisions. So, that includes a few professional athletes and a few CEOs and kind of startup companies. I seem to have developed some following in the medical startup. But it's really helping people understand how the human brain actually works when it's assessing risk. And then really at the end of the day, helping people sort out their intuition, which is actually unconscious pattern recognition and a real form of knowledge, versus impulse, which is irrelevant and about something else. So I talk to people on the phone all day, basically. Wait, I can't hear you. Where'd you go? I see you talking, but I don't hear you. What happened? I heard you fine before.
Can you hear me?
Oh, now I can. Yeah. Now I can.
Okay, great news. Sorry, it looks like my mic was running out of battery. No, it's all good. I'm back.
Yorkshire I've got my Yorkshire Terrier on my lap because for some reason he wanted to stay with me. So if I'm acting weird, it's because I have a dog on my lap who's about to put his face in the... Bo, get up there so they can see you. Okay. Anyway.
I am getting a USB charger. I'll be 1 second, and I should be ready to
Okay.
rock and roll.
Well, these things happen. In the meantime, so here's my rescue Yorkie, everybody. Who's like, for some reason, Bo, say hi. Oh, I'm shy. I'm shy. He doesn't usually need to sit on my lap, but for some reason this morning he did. Okay, got it.
Oh, there we go. I'm back.
You are
So
back.
sorry. That's never happened to us before. All right, so Denise, let's talk about I think.
Oh, there you go again. I was having like one silly tech problem after another this morning too.
All right, we're back. I've got sound. Sorry about that. Denise, the big question that everybody's got, and we told people that you're coming on the show, and they all asked the same question. The question was, how real is the Billions program? How much was that like actually being there? Is it dramified, or is that how it actually was?
Well, in total, it's way dramatized. I mean, really. It's not like, believe it or not, actually, most of these guys are decent human beings. Now, I mean, there are some huge hedge funds that like work people to the bone in a really creepy way, make you work all the time, middle of the night. But a lot of them are like good guys who just love the market and love the mental challenge of the market, and are actually in it more to win the game than they are to accumulate the money. Like, it's not. So, I mean, Billions is like what, everybody's whatever, skating under the law or around the law, and, one crazy thing after another. It's, that's, I mean, yeah, some stuff goes on that shouldn't go on, but it's not like, they're just human beings who like have a talent for the market, and they're guys, and they're generally, in their 40s, 30s or 40s, and they're, damn competitive, but it's not like crazy like the show is.
What about mindset? So, I mean, these guys work under high pressure. They're managing huge money, which gives them a lot more pressure. There is a lot of pressure to perform. And, sometimes you do get 2 or 3 trades that go against you, and you start to lose confidence. Is that when you phone Denise?
Yeah, generally. Every once in a while, I get somebody who says, we just want to be better. We just want our team to be better, and will you come in and work with us for the next year and help our team be better? Every once in a while. But mostly it's like, I suffered a drawdown in the bull market of 2020, and, I can't quite recover, and I lost my confidence, and I don't trust myself, just like you were saying, and help me break out of this. So, or in some cases they know they have, like, everybody's got a certain pattern of mistakes they make. I mean, everyone in the market. Get in too early, get out too early, whatever. You don't size up enough, you get too big at the wrong times. Like, everybody's got a pattern. And so what'll happen is people get frustrated, like, the whole Britney Spears song, "Oops, I Did It Again." And like, then at some point they'll call and say, I've tried to solve this every which way and I can't. Then maybe you can solve it.
Okay, so why don't we talk about this? Because I have a problem. I FOMO into things. I get excited. I get FOMO. I get fear of missing out into trades. I keep repeating the same mistake, and I keep getting into trades too late. What do I need to do?
So tell me a little bit more, because you said two really different things. FOMO tends to get you into trades too early. And getting in too late is a slightly different thing.
So when
we first have to get the problem right.
So, I mean, what I do is I watch the market and I see people making money on something. And I keep saying to myself, should I get in? Should I get in? Should I get in? And I see more and more and more people getting into something. And then eventually, when it's quite late, I eventually get in and I'm always the last one in. And then I'll end up being
so
the
you
one.
actually don't. You're actually hesitating.
I'm hesitating.
So while that's happening, like, we need to know what's going through your head during that period where you're seeing it rise and you're not getting in. Like, we need to hear.
Okay, so amazing. So I think we need to book a real session and maybe even have the session live. But on a much more serious note, when you're dealing with traders, with investment managers, what are the most common mindset headspace problems that you're facing? What are the most common things that you're seeing? Because I'm sure that those are relevant to the traders here on Crypto Banter. What are the things that you see the most in the hedge fund space, in the trading space, etc.?
People don't really listen to themselves. They have all kinds of years of experience in training, and they've been successful in the markets at some point, or they wouldn't be in these positions. But they doubt themselves. They'll think X is going to happen, but then they don't execute on that, and they can't understand why. And so I often think that what I do boils down to helping these primarily guys. I do have one female in London right now. Listen to themselves. So actually with that female in London, she had to take some time off because she had COVID and complications. And so she was coming back. She's like, okay, what's the essence of what I have to do? I said, number one, you have to ask yourself, what do I really truly think? And wait for the answer. Because that's whatever the answer is the result of the work you've done. And then you say, how much do I believe it? Do I really believe myself? And so I spend a lot of time getting these people centered or recentered in the analysis, in what drops out of their work, which really is intuition. It's really unconscious pattern recognition. I believe whatever, treasuries are going to do whatever, or for that matter, Bitcoin. Because a lot of them talk about it. Some of them can't invest in it because of their charter and their rules, but they have opinions. The other thing is most people mismanage their own mindset. So they think they're not supposed to be afraid, or they're not supposed to be frustrated, or they're not supposed to be disappointed, or God knows they're certainly not supposed to be angry. And they criticize themselves for the feelings they actually have. Because I'm always trying to get to what do you really feel and why do you really feel it? Which, by the way, is a superpower to be able to answer that question. It's really easy for me to say, and it's easy for you all to understand. It's not easy to actually do. But when you get the answers right, you get information you don't otherwise have. But in that process, I work with a portfolio manager at Wellington. I can say that because it's so huge, no one could ever figure out. And I've been working with him since last fall. And the other day, I realized at the bottom line, he was like, but I shouldn't feel that way. He was able to more or less answer the question, but then he was judging it. And he also didn't want to feel that way. Well, judging it and wishing you didn't feel that way is a distraction, a waste of time, and going to set you on the wrong path. You just got to figure out what it really is without any judgment. When you do that, it actually will provide more information and get in your way less. So that's what I do. Most of my clients I talk to twice a week. They can text me and email me. Most of them don't, actually, even though they can. But yeah.
It's very interesting that you say that you take people who usually do the work and then seem to not have confidence in their intuition or the work that they've done. You're kind of saying that the intuition is a function of all the work that you've done to date. That's really what intuition is.
Right.
And so if you doubt your intuition, then it could be that you doubt the work that you've done, or that you haven't done enough research, or that you haven't done enough work. I mean, that's one of the reasons why you would doubt your intuition, because you don't truly believe that you've done enough work.
Well, it usually works. That's true. But it usually works more like this. Like, this side of me knows I did the work, knows this is how the price should go, that knows this is what's happening in the market. But this other side of me, is self-critical or doesn't believe myself because I blew a position last year. I mean, last fall, I got a new handful of clients that had made a bunch of money in February and March last year when the market dropped, and then fought it in the rise from April through the end of the year. And literally, I had like 3 or 4 or 5 people show up with the same problem. Like, and they'll say, have I lost it? Can I not do this anymore? I mean, one guy manages $50 billion. And I basically had to talk. I'm like, no, you have not lost it. You didn't get to the place where you could manage $50 billion. And then you woke up one morning and didn't understand. It's more that we spend a lot of time trying to figure out what are really going on with the markets, given that they seem kind of disconnected from reality, and with the treasury market the way it is and interest rates not rising. And so a lot of the models that these guys have learned to use haven't been working.
Why do markets feel so disconnected from research? I mean, and the reason why I ask that is, we look at the Bitcoin markets, and let's look at the Bitcoin markets first. The fundamentals seem so good, but the markets are going down and not stable. In world markets, the economies seem to be broken, but the markets seem to be going up because of perhaps money printing. But is there something that can point to why markets and fundamental research by so many good analysts are sometimes disconnected?
Well, right now, as my $50 billion client says, the wall of money, like, we're injecting, what is it, my number's probably off here, but it's something like $140 billion a month into the economy.
So it's just because there's money flowing into the economy.
Yeah, so you see all this rise in asset prices, like rise in home prices, and rise in equity prices. But it's like literally because this money's got to go somewhere. It's not like it's going, generally speaking, to the people who need it. So at least that ends up being, I mean, I can't tell you how many conversations I've had in this year about how the markets aren't working like they should. The relationships between the different asset classes aren't working as they should. Now, in every case, I will occasionally offer my analysis of a situation, like what I actually think if I were trading, but I really spend the time asking hopefully the right questions to help them sort out what do they think, because nobody knows, right? Like, nobody knows what's going to happen tomorrow or next month. It's not knowable. All you can do is make an educated guess based on your experience. So I just help people do that better.
What about post-traumatic stress disorder? What about the fact that you sometimes get hit so hard by a market move, which goes against what you thought? You lose a lot of money. And then when you're faced in the same situation again, you don't trust your ability. How do you deal with the PTSD? And I'll tell you, I feel that sometimes I may have some kind of PTSD because of the 2017 correction, where I made a lot of money, I was rich, and I lost it all. And as a result, I find that I don't trust my ability. So I'm sure that you see that a lot, where one trade from a long time ago gives a trader or an investor super PTSD for the next time that they in that same situation. How often does it happen? How do you deal with that?
Yeah, so it does happen a lot. I think it happens primarily because no one's been taught how to deal with it properly. So basically, what we now know about the brain that has not been well broadcast or understood yet is that we are always predicting a future event and a future feeling. It's called anticipatory affect, based on what happened to us in the past. We cannot use our intellect to talk ourselves out of that. We have to work through the feelings. And no one knows they need to do that, or they don't know how to do it. So like my classic case is a client that called me, I mean, this is years and years ago now, but called me in January, I think it was of 2013, and basically said, I've been in a slump for 10 years. I've tried everything. Like, I used to be really great trader and I can't solve it. Well, what everyone has to do in these circumstances, he had to do, and we did it, is go back to when it started and work through what happened and your feelings about what happened from when it started. Not all the stuff that's happened in the middle, because all the stuff that's happened in the middle is because you took a hit, you know, and let's just say you're off balance mentally, and then you haven't been able to believe in yourself or haven't had confidence or whatever. And so all that's just like, it doesn't really matter. But if you go back to the beginning, and in that client's case, his wife had been kidnapped. She was saved, and it was for her father's money. But he basically always felt guilty and responsible. And he never really like worked that out. And he'd use all these strategies that were cognitive based, you know, telling yourself things to change how you feel. It works a little bit in certain circumstances, but it generally doesn't work. So again, you got to go back like, okay, what was I feeling and why was I feeling it? And let's get to the bottom of that. So like in his case, we got to the bottom of, he really did feel like kind of responsible and maybe a little bit impotent and guilty. And when we ended up revealing that, making it explicit and talking through it, he started to get over it. And like literally the slump, he snapped out of the slump, and that was that. On his merry way he went, making a bunch of money. He actually has a crypto kind of hedge fund now. I don't talk to him on a regular basis, but so we got to go back to like all of the emotions around that.
So
Sorry, I'm just a messenger.
The comments are going absolutely insane. We've got people crying in the comments. You got Victor says, "Holy shit, I'm sitting here crying. I'm not alone." I think you've hit a nerve here. So I'm going to make a proposal. I would like to hire you for one session live on Crypto Banter, where we dig into why I have certain behaviors. I'm very happy and open to do it in front of the whole community. We have a massive community, but I'd like to have a session with you so we can dig into why I make certain investment mistakes. What do you say?
Well, we can do it, but two things. Normally, it does take more than one session, to be truthful. And number two, it always has something to do with the narratives we have in our head that we got while we were growing up. So
I'm keen to do it. I'm keen to do it. I think it's all about mindsets, and I think that you've hit on a nerve here. I think that you're showing us that mindset in your investing career and your trading career is actually not a function of psyching yourself up, reading self-help books, but it's actually if you're making mistakes or repeating patterns, you got to work out where the pattern comes from.
Yeah.
And what I want to show the community is almost what the process looks like. And that would be amazing. So, I mean, if you'd allow me to, I'd love to set it up and do it with the community. There's 5,000 people watching this. They all clapping and just do it, clapping.
I will say this. So I wrote this book called Market Mind Games, and I do take you through it in that book. So anybody can do it. Like, you got to do the homework in there. Like, there's a whole series of exercises, like, you know, find out what your real self dialogue is while you're trading, you know, find out all your memories, all your feelings about it. Now, what it's also true is humans have defense mechanisms, and they've built up, you know, resistances and reasons not to know all these things because it kept us safe growing up. So while I lead everyone through it in the book, you know, some people are really able to solve it through that, and some people need someone actually helping them. So, and we don't know where you will be, but
so amazing. I think it's a good idea to showing people the book, to showing people the process in the book. let's go through a process. I want people to understand the process that they need to go through. And if the book is a great framework, let's do it.
I mean, it's in there. There's a whole series of exercises in there.
Right. So Denise, look, it's been absolutely fascinating. The community are going crazy. I've never seen comments like this. It's too short. It's too short. We need to get you on again. We certainly will. I think you're going to have to become our resident Wendy Rhoades for the community. But I'll chat to you offline and we'll try and arrange.
Okay. All right. Thanks for having me.
One last question. Do you ever get involved in markets? Do you ever trade?
I do still trade a bit. I mean, this happened because I had a master's degree in neuropsychoanalysis, became a trader, ran trading desks. But yeah, I do still trade a bit. Not that much, but like I managed to short GameStop at 350 and buy it back at 85, and I'm very proud of that.
She's a trader. She's one of us, guys. She's Denise is part of Banter.
I traded I started in 2004, and I did my last kind of full-time day trading in 2009, and then I was on jury duty, and that disrupted me, and then I started writing my book, and then I got so busy that it felt like I was meant to do this thing, and so I stopped I was a member of the Chicago Mercantile Exchange. I know a thing or two about trading.
Do you find yourself making the same mistakes that you teach people not to make when you make your investments, when you make your trades?
Not so much.
Not so much. That's amazing. That's great. Yeah, because now we know that the system works. Now we know.
I mean, it's not that I'm perfect, but also, like I say, in a certain sort of way, my market research now involves walking by CNBC that I have on in the living room, so at least I know what the markets are doing. So when I have a very detached viewpoint, sometimes it helps. That's how I did the GameStop trade. I was just I had my clients all talking about this is insane, and all of that. But I walked by and it was 345 or whatever. And my husband actually, I'm like, I don't know, buy some puts or whatever you have to do to have us have a naked short position. He didn't want to do it. He wanted it to be hedged. I was like, no hedging. No hedging.
That is excellent. Denise, what is the name of the book? We're going to get it, and is it available on Amazon or Audible? Yeah. Can we put the link up in the description?
Well, it's called Market Mind Games. The Kindle and hard copy are available on Amazon, but McGraw-Hill, my publisher, they've been a pain. You'll find spelling mistakes in it. They're not my fault. I told them all about it. But they ended their contract with Audible. So it's not on Audible, although there's some other audio version out there, except I can't tell you what it is.
It's Amazon. It's available on Amazon. It's just not Audible.
It's just not Audible. But there is an Audible version. I just don't know how you buy it, and I haven't.
There we go. Market Mind Games. Freddie, let's get the Amazon link and let's actually paste it in Amazon so that if our community want to go and buy it, guys, you know what you need to do. You need to go and buy Denise's book, and we'll get Denise back to help us through our mindset while we're trading. Denise, what an honor. What a pleasure. We never, ever run over on our shows. We usually cut our shows at 1 hour, but today we're at 1 hour 10, and people are still saying great show, and 5,000 people are still here, and they're still watching us live. So I think it's testament to what's going on. Thank you so much. Much love to you from the community.
Okay. Bye.
Talk to you soon. How cool is Denise, guys? Wow. I can't wait to get onto Banter and to talk to her through a trading problem that I have and to hear or to see how she solves the problem. Because I'm sure that if I have the problem, many of you would have the same problem. And I'm brave. I'll do it in front of all of you. I don't think I have anything to hide. I think I'm pretty transparent, as you guys know. So I think it's amazing. All right, so we are 10 minutes late, but quick reminder that tomorrow is Banter. No. Tomorrow is big Banter. Sam Bankman-Fried, Mike Arrington, Vinnie Lingham, Alex Mashinsky. Huge Banter. It's going to be spicy. It's going to be spicy. You know how Banters go. I will see you guys again tomorrow. 6 a.m. EST for Sheldon show. 10 a.m. for my show. If you are here still and you enjoyed Denise, hit that like button one more time to get this video out, because YouTube is gatekeeping our content. So we'll see you again tomorrow. Until then, if you are trading, trade well, my friends.
Crypto Banter is a social podcast for entertainment purposes only. All opinions expressed by the hosts, guests, and callers should not be construed as financial advice. Views expressed by guests and hosts do not reflect the views of the station.